Welcome to a new episode of the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor, period. And of course, this podcast is sponsored by our friends over at Vanguard. I'm really jazzed up about this next episode because it is May 1st when I'm doing this. It is National Investing Day, and the company that has ushered this in, finally, drumroll please, it is Charles Schwab. Charles Schwab, new CEO. I can still call you the new CEO, right? January officially
Absolutely.
started? Rick Wurster in the house. Good to see you.
It's great to see you. Thanks for having us on. And it is an exciting day, a new day, National Investing Day. It never existed until this year.
Yeah, and I was just briefly talking to you off camera. I was thinking back ahead of this interview. A stock was never a discussion in my household. I have to be honest. I didn't hear about investing or stocks maybe until I was in 9th or 10th grade, and still I felt completely behind. What took so long to get a day like this on the map?
Well, I agree. 80% of people graduate high school without having taken a personal finance class. And so I think you're not alone in not having grown up talking about stocks. And our goal with May 1st is to try to have a day where people think about having that discussion with their families and with their loved ones, talking about the power of investing. Because I think when people learn about it early and are conscious investors, they're going to grow their wealth over time. And the more people that do that, the better. So we couldn't be more thrilled to have a day to recognize investing.
If I mentioned a stock in 1993 to my dad, he'd probably tell me to shut the hell up and go out and rake some leaves. I mean,
yeah, right.
But
hey, me too.
Right? But
yeah.
It's a different time. But why May 1st?
May 1st is a incredibly important date for us as a firm. 50 years ago on May 1st, stocks were inaccessible for most Americans. On May 1st, 50 years ago, the SEC deregulated commissions in our country. And on that day, 50 years ago, most brokerages took that opportunity with deregulated commissions to raise commissions. But Chuck Schwab, our founder, thankfully, took the opportunity to lower commissions. And as a result, it brought millions of more Americans into investing and made it accessible. And you've seen over the last 15 years, Schwab, as well as the industry, do everything we can to bring down the cost of investing, to make it more accessible so that anyone can now invest if they want. You can take the money you make raking leaves, and you'll have enough to buy stocks.
I think it was 5 cents back in 1993.
Well, that might be
Maybe
a little,
it's $1 today.
You can scrape a few bucks together. You can go invest now, which wasn't that way 50 years ago. And so it's important to recognize that day because now any American can get invested and own a part of a company, and that's great for people saving, investing, and enhancing their financial lives.
Before we drill down into this more, level set for us that we all know Schwab, of course. I think a lot of people do. But let's say you are my 15-year-old self and you've never heard of Schwab. How much money do you manage, and what does the company do from day to day?
We have $10 trillion of assets that we support, 45 million client accounts across our brokerage business, our retirement business, and across our bank. And what we do on a day-to-day basis is we champion our clients' financial goals and help them get to where they want to be in their financial life. And we do that across interacting with them digitally, supporting them in live person-to-person interactions. We have branches, 400 branches all across our country and in communities. We've got 4 or 5 here in Manhattan where we're sitting today. Our goal is very simple, and that's to make a difference in your financial life, help you get invested, and to live your best financial life that you can.
So in that Mount Rushmore of investors, I've got Warren Buffett, Charlie Munger, Charles Schwab. Help us bring to life the human that is Charles Schwab. Who is this OG of investing?
Yeah, well, I think he is the OG. That's well put. For 50 years, Chuck has fought for the everyday investor in our country. Back 50 years ago on May 1st, if you had $1 million, it would cost you about 1% of your portfolio to buy a basket of securities.
It's awful.
Well, that's awful. But if you had $100,000, it would have cost you 10%. So it was you couldn't invest unless you had millions. And for 50 years, Chuck has done everything he could to bring down the cost of investing, to make it more accessible and more understandable. And what's even more exceptional about Chuck is that as much as he's done for the everyday investor, he's an exceptional person. He's kind, he's generous, he's thoughtful. He's just a great person, and he's done so much for investing in our country. And I couldn't be more excited that we have a day now, May 1st, National Investing Day, to recognize all of that.
What have you learned about investing from Charles Schwab?
Number one, investing is an act of optimism. When you invest, your expectation is that in multiple years, you're going to have more money and that the company that you're investing in is going to do well. Number two, to try to, as much as possible, ignore the noise. Markets, from day to day, there's going to be news. Things are going to go up and down. But the more you focus on the long term, your plan, the better off you're going to be. And number three, to stay diversified. The more diversified you are, the more balanced your portfolio, the more you're going to be able to withstand the volatility that may come in the market. So those are three of the principles that I've learned from Chuck.
It's been an amazing 50 years in the investing community. Of course, you've had May 1st, 1975 with the initiative that you talked about before. Then you had the rise in the next generation of brokerages, many other things. Like, what is is there the next big thing in investing that people need to be prepared for over the next decade?
I think one of the things I'm excited about over the next decade is finding a way to bring the strength of what we do to all Americans. So we serve today 45 million client accounts, and we have a personalized relationship with many of them, but not all of them. And in part, that's because we have a personalized relationship with those clients that have more wealth and are engaging with us on a day-to-day basis. I think over the next decade, with the usage of AI, we'll be able to bring the personalized level of insights that we bring to clients in those personalized relationships. We'll be able to add to that through AI and be able to do that in more of a digital way. And that will allow us to serve a group of clients in a personalized and customized way than we might not have been able to in the past, but will be able to do in the future. So it comes back to this theme that we were founded on 50 years ago on May Day. It's about making investing more accessible so that everyone can benefit from the power of investing.
Is 24-hour, 5-day-a-week trading one of those next big things? And is the financial system ready for something like this?
It's a really important question. I do think 24/5 trading is important and helpful to investors. Where we have observed it to be the most helpful is for our international investors. We have a lot of clients that sit in Asia and trade U.S. stocks, and for them, they have to get up in the middle of the night to buy and sell stocks. Yeah. That's not a great experience. And now with 24/5, they can do it during their daytime. But I think it's really important that as we move to 24/5, to ensure that we have the liquidity and that the execution on those trades is just as strong or close to as strong as it is during market hours here in New York.
How concerned are you that type of trading, that around the clock, brings in a mindset that you need to trade more, that you can't necessarily buy a share in Apple and forget that you own it and open it up 10 years from now?
Well, we've got a range of traders, many that trade several times a day and are actively trading the market. And then we have the majority of our clients who tend to be long-term oriented. And so I think there's different types of investors, and they're going to behave differently. We certainly wouldn't want someone to overtrade. We want someone to have a plan and stick to that plan. And for some, it's being an active trader. So we want people to trade thoughtfully.
Does it add more volatility to markets?
I don't think 24/5 adds more volatility to markets. I think it allows clients to trade on their time when it makes sense for them, and I think it brings a benefit to investors.
I hope I have this right, but you're a chartered technical analyst?
I am. Little known fact, Brian.
So you're a charts guy.
I am a charts guy.
Do you still read stock charts and looking for what the head and shoulders patterns?
Yeah, absolutely. Well, when I told people I got my CMT, my parents, they said,
chartered market technician.
Yeah, CMT. They said, "Are you a masseuse?" I said, "No, I love to look at stock charts." But yes, no, I am fascinated by charting. I'm also a CFA, so I like to blend technicals.
I was going to ask you that next,
and fundamentals.
Yes.
I think the combination of the two is quite powerful. I think momentum, which is really the underlying tenet of technicals, I think it's a very powerful indicator. And you look at the last couple of years, you can really see it. The Mag 7. I mean, when we first started hearing about the Mag 7, fundamentals in those companies were getting better. The charts were going up, and it just continued.
Lots of breakouts through resistance, right?
A lot of breakouts.
I know a little bit about charts.
I'm
in my first rodeo.
I'm impressed. We could probably get you one of these CMTs.
Yeah, I should, actually. So where do you lean more into? I mean, of course, now you're the CEO of Charles Schwab, maybe a little less time reading stock charts, but are you more of a fundamental guy as opposed to a charting person? And if you see a breakout potential on a chart, do you then check the fundamentals, or you just, okay, I see that breakout potential on the chart, I'm all in?
Yeah, I'm focused on our clients 24/7, literally. constantly focus on our clients and how we can help them. I have not done a lot of personal trading because I've set that aside. I just want to make sure we nail it for our clients. But I think in past periods when I have been more actively engaged in investing day to day, to me it's the combination of the power of technicals and fundamentals is where I've personally had the most success. If you can find a place where a company that has good fundamentals and where the chart is in a period of momentum, where it's above its 200-day and moving up and to the right, that's where I've personally seen the most attractive returns.
Over the course of your career, not to belabor this, because we have a lot of chart readers on Yahoo Finance. Like, they come to Yahoo Finance to read these charts, and now we have advanced charting. And I can go on for days about this. I love the stuff that we do. But is there one or two formations that you always looked for that gave you a signal that that's going to be a great stock potential? I need to go research it more.
I think the signals are more challenging to rely upon from my perspective, and I've quantitatively tested a lot of this in my history. To me, the simplest thing that I would look for if I was someone listening to your show and wanted to focus on the technicals is just look at the momentum in the stock. Mm-hmm. Is the stock moving up to the right? Is it above its long-term moving averages? Okay. And the reason I would do that is because the technicals reflect the fundamentals of the market. If a stock is going up and to the right, something good is fundamentally happening at the company. So I'd keep it simple and just and look at momentum.
When was the last time you talked about stock charting?
It's been a long time.
Right?
We
do our research here. Yeah, fine. We're not playing around. All right.
Yeah.
Hang with us, Rick. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid, sponsored by our friends over at Vanguard. Having a great chat here with Charles Schwab CEO Rick Wurster, talking about some stock charting, some CFA. I mean, full disclosure, I failed my level 1 when I was a stock analyst, and I gave up, Rick. I never give up on anything, and I am maniacal about things, and I regret doing that.
It seems to have worked out okay for you, Brian. You're doing really well.
It did. I still have the books. I can't get rid of them.
There's still time.
But they're still important. I actually still use them. As you can imagine in this role, you still read a lot of financial statements, earnings calls. I still use them as great reference points. I mean, I think the CFA is really tough as hell, but really underrated.
It's a robust program. You have to study a lot.
Yeah,
I agree with you. It's a great program.
Yeah, I just wish it was a little bit easier. All right. But you mentioned markets. And April was a wild time for markets. First week after Liberation Day, stocks essentially fall off this table. Bad stock formations right there, fall off a cliff. But they rallied back. Like, why do you think things have gotten back to, in some cases, where they were before Liberation Day?
I think, we try to take the long-term view. Markets will go up or go down. Our focus is on helping clients have a plan, stick to that plan, and deal with these periods of uncertainty. One of the things I love about Schwab and our mission is that we champion our clients' goals, and we're there for them in periods like this. So this past month or so, when there's been all these headlines, it's gone down, it's come back up, we've been there. We've seen record levels of logins into our digital app. We've seen a heavy call volume. We've been able to support clients through this, and it gives me great pride in being able to help our clients through what's been a headline-driven market.
Why do you think they have returned to the markets? Is it valuation? Is it that fear that if they don't get in now, they might miss that next big move that, looking out over the next 2 or 3 years, maybe this is an opportunity?
Yeah, in general, we have seen some net equity selling. And we have seen sentiment among our clients become a little bit more bearish. So in general, as a group among our 45 million clients, there has been a little bit more concern. Now within that, we have seen some of our longer term oriented investors, some of our more active traders get invested. The other thing we've seen is our young clients. It's interesting. I was just in Ann Arbor in one of our branches, and I said, how are clients doing? And they were telling me our younger investors, many of them haven't seen a pullback like this. And so they're the ones, our youngest investors are some of the ones calling us, where they've never called us before.
How young are you talking here?
20 to 30-year-olds,
Wow.
under 30, which makes up about a third of our new clients that come to us every year. A third are under the age of 30, so they're young investors getting invested for the first time. And because markets have generally been going up for many years, they haven't really seen a pullback. And so it's for some of them, it's the first time they've engaged with Schwab, called us and asked for our expertise. And that, for us, is great to be in that position to help a younger investor think about the long term and how to navigate a market like this.
This group must have been terrified over the past month.
Well, I think it's important for people to know markets can go both ways and to be prepared for that. They've faced it. I think they're facing it and generally holding up well. But the first time you go through a market pullback, it can be disconcerting.
Especially when you don't have a lot of. I don't know what a sub 30-year-old is, but I think sub 30. I mean, they're not wealthy. Right. It's got to be very worrying to them.
I think it is worrying, and I think they've benefited from the fact that they've been invested in, and it's been such a robust market the last couple of years.
They only know up.
They've seen up, and so when they get in an environment where it is a little choppier, they want to talk to someone, and oftentimes it's the first time that they wanted to talk to someone. And so what I've heard from, I was in Ann Arbor recently, I was in our Austin branch not long after that. One of the things that I've heard is we see these young investors coming in and wanting to talk to us. And that's the benefit of Schwab. It's not just an app. We sit by your side and help you achieve your financial goal across multiple platforms. And in periods like this, that really shines.
I can only imagine how much data and what you get in your position. But this younger investor, what do their portfolios look like?
We see, primarily stocks. If you're under the age of 30, stocks make a lot of sense, and I think most clients have most of their assets in there. Some interest in crypto. At Schwab, we're the number one custodian for crypto ETF assets. Some of that comes from our younger investors. So that would be primarily what we see.
Is it the Mag 7, and is it just momentum stocks, like stocks they may see in the news and they go out and buy them and that's it? Like, I'm trying to figure out, because we get a lot of data here at Yahoo Finance, and it is the community loves Mag 7, but what about the other 493 stocks? They have in many cases strong fundamentals. A lot of those companies are growing sales and earnings. Their margins are pretty good.
Absolutely, and we see a lot of our investor base investing in those other 493. We certainly have clients that buy the Mag 7, but we also have many that buy the whole market or participate with many of the other 493. And I think one of the indices that's done well recently has been the equal weighted indices, and I think there's lots of ways to get invested. Our primary goal is to make sure clients have a plan, they know how to get invested, and that we help them in their journey. And it all comes back to May 1, National Investing Day. That was about getting more and more people invested so that they can own their tomorrow. And whether it's the Mag 7 or a broad set of stocks, it's just great clients are investing in their future.
Last time we talked, you were dabbling in Bitcoin. Any update on where Charles Schwab stands in the field of cryptocurrency?
Sure. First, there's lots of ways for clients to get invested in crypto at Schwab, and we provide lots of insights and education around crypto. We want to be a destination that investors choose to invest their crypto assets at. In addition to all that we do today, we are going to add spot crypto trading in the next 12 months. We're going to focus initially on Bitcoin and Ethereum. It'll be on our Thinkorswim platform, then shortly after on Schwab.com and our mobile site.
No, like puppy coins. This is like the real. You're going with the real things out of the block here.
Yeah, our observation is that there's different types of crypto investors. You have those that have stock and bond portfolios that want to invest in crypto because they've learned a little bit about it, they've heard a lot about it, and they want to own a little bit of it. And those investors we see primarily want to participate in Bitcoin and Ethereum. And then you have what I would call a group of Bitcoin aficionados, and they're in all these coins that we're less familiar with and that the value of is harder to discern. Those are areas we'll leave to the side and let someone else make available. We're focused on those everyday investors that want crypto to be a part of their portfolio.
How does adding crypto, does it add more risk to the balance sheet of a Charles Schwab?
These are client assets, so it's clients investing their dollars. It's on their balance sheet, not ours. One of the things that has prevented us from offering crypto to date, but which has changed, is there have been regulations for bank holding companies like ourselves that when a client held crypto at our firm, we had to actually hold capital against it. which we don't against the client equity or bond positions, but we would have had to against a crypto position. So that's prevented us from being in the market. That's changed. We'll get into crypto. But no, our balance sheet, that doesn't show up on our balance sheet. It's the client's holdings.
A lot of CEOs that I talked to in financial services coming into the year, they were very optimistic on the regulatory backdrop under the Trump administration. Have you seen any movement on regulation that would make you excited for the balance of the year, or has that just taken a backseat to tariffs and everything else going on?
I do believe the regulatory environment will be a conducive one for retail investors. For 50 years, we've worked closely with regulators to try to create a market environment that the clients trusted to participate in, that was the most efficient, most accessible, most liquid, least costly market in the world. And I think collectively we've done that, working closely with regulators to make that happen. As we look forward, I think we'll have a regulatory regime that is focused on the right set of things for the end investor. And that focus, rather than a broad, more comprehensive approach, I think will be a great thing for the retail investor. And I think generally it will be a good environment for firms like ourselves.
In the last part of the podcast, we always love to get a hot take from a guest. None of this is written down, just off the top of my head. How hard is it to be you in this role? Can you go play golf without someone asking you, hey, what's the next hot stock tip?
You know, it's not.
You're a golfer.
Yeah, I am a golfer. I played golf in college. I love golf, but I love my job more. And it's what is so rewarding about this job is feeling like that collectively, myself and my 33,000 colleagues, that we can work together to make a difference for clients in their financial life. I wake up every day out of bed, 4 a.m., ready to go, because I know on the other end there's a teacher in Indiana that's going to benefit from something we're doing. There's a construction worker in Boston that's getting up early, pounding nails, and saving every dollar they can to retire. And for us to have the opportunity to stand beside that person and to help them in whatever channel they choose to work with us in gives us a great feeling of responsibility, but also of inspiration to make a difference. So I love what we do. And when you love what you do, it's not hard. It's a real honor to work with my 33,000 colleagues to make a difference.
My go-to line is when someone asks me, usually family members, like, where do you think the market's going to go 2 years from now, 3 years from now? I said, look, 25 years from now, it will probably be higher. I mean, do you have a go-to line that you just tell everyone, it's just okay, it's going to do this, and let me go back to playing golf?
I say, come in and talk to one of our financial consultants in a neighborhood near you, and we'll help you get invested. It's hard to give stock tips, but I think
we don't need no stock tips.
I think your advice is the right advice.
Yeah.
Get invested and stay invested,
yeah.
and I think you'll grow your wealth. And we've seen that in our country in a big way, and it comes back to 50 years ago. Now everyone can get invested, and they couldn't 50 years ago on May Day, National Investing Day.
Mm-hmm.
I hope it becomes the new Valentine's Day that everybody celebrates,
yeah.
and so we'll see. It's a big day for the firm.
And this is right in the wheelhouse of Yahoo Finance. So I appreciate you guys coming here to talk to us about it. Celebrating National Investing Day, May 1st. Charles Schwab CEO, Rick Wurster. We'll talk to you soon.
You got it. Thanks for having me,
All right,
Brian.
Of course, appreciate it. All right, and that's it for the latest episode of Opening Bid. Hit us with all those 5 stars on the podcast platforms, the thumbs up on YouTube. Love all of your feedback, especially on something like National Investing Day. Very, very important stuff. I'm also very curious on how you are investing right now, and if you are investing, and if you're not investing, I want to know why. Hit me up on YouTube or at X. Forgot my own name. At Brian Sozzi. Talk to you soon.